Should we be concerned as traders and investors? The stocks that were once leading the market are now starting to falter, and both AMD and Google's earnings didn't seem to excite the markets, falling in after-hours trade as much as 10%. But what really is going on? What are the dark pools doing, and where are Wall Street placing their biggest transactions? In today's video, we'll take a look at the good and the bad when it comes to markets, and of course, the opportunities that are starting to arise in some of our favorite pairs in recent times. That, along with whether a sleeping giant is about to awaken, coming up in today's show. Guys, this one is not to be missed. Well, welcome back everybody to the Daily Show. We have a lot to discuss because of course earnings came out and it looks like it's not so good when it comes to some of the big tech stocks. My name's Tom, but let's get started straight away with asset managers because of course what they're doing is very important. Never look at what they say, but what they do. Now, a lot of people are saying that Trump 2.0 is going to be the same as Trump 1.0 when it comes to the game plan for stock markets, potentially tax cuts and obviously deregulation. But you've got to remember, where are the asset managers actually positioned? Well, as it turns out, there's a huge difference between 2017 and where we are here in 2025. And we've already illustrated this several times. But remember, this chart here, shared by Seth Golden over on X, basically shows you a very important zone, and that is a level of absolutely FOMO and most likely greed. Now, what is this also coupling with? Debt. And of course, what have we seen recently in 2024 into 25? People are trading 3 times levered funds at the highest rate we've ever seen. And of course, margin debt is on the increase. This will be a story that you have to watch for 2025. So if you're new to the channel, make sure to subscribe and ding that alarm bell because we will be posting some incredibly important stuff as we see this type of unfold. Now, speaking of volatility, everybody knows that 2025 has been up, down, all around, and we do expect a lot more of this. We were warning this as of late 2024 that this seemed likely. But the good news is that maybe we've seen enough spike in daily sentiment volatility to take us to a point where we can start to look at some data and say what historically has happened after this event. Now, it's not that clear, but 80% of the time, 1 month later, S&P 500 was actually up. And of course, the VIX was down over this period. And that usually meant that the biggest vol component was already amongst us and done. Now, I'm not sure it's going to be that simple this year, but as we always say on this channel, follow the price action and most importantly, have those key levels ready to know when we're entering into positive gamma or negative gamma events. Now, as we mentioned, the leaders, semiconductors, Nvidia's been recently coming under a lot of fire. And as we know, AMD has just given its earnings. And on the surface, it was okay until you look at the server side, which of course disappointed the market. It was down 10%. After being up 4% on the day, and you can see here the charts. Basically, revenue was up across the board though, and it has a lot of people scratching their heads saying, what exactly is going on? Remember, AMD is right now at around these prices, around fair value. So before that was actually incredibly overpriced by most metrics. Speaking of other markets that were, of course, moving around, it was Google. And I think this is where the key thing came through to me anyway, which was that Google have announced $75 billion of planned AI infrastructure for 2025 versus what the market expected them to spend, which is 57.9. Now, you might think on the surface, oh, that's really good. But what the market's starting to wake up to is it needs return on investment when it comes to these hardware buys. Now, who could be the winner out of this? Well, maybe it's going to be Nvidia and AI chip suppliers. Obviously, we saw some of the largest trades come in for those over the last 24 hours. So certainly something we need to be watching. And I think this is not necessarily a super negative on something like Nvidia with this announcement. But of course, Google needs to be looked at on the charts to see whether it can hold up because, yeah, the market didn't quite like it. Speaking of who didn't like it, massive dark pool came in before the earnings announcement. You know, sometimes they know. And yeah, this was in a bear fund. And of course, I'm sure they'll be closing out this position over the next 24 hours. Of course, if they do, we'll update you in the next video and share that because, of course, if they're closing the position, that may be a temporary low for Google, and it could be also a good buy opportunity when the market sells it off 6-7%. Remember, Google's earnings wasn't shocking across the board. Let's now talk about peak to trough moves. As we mentioned, it is really important to look potentially outside of the Mag 7, outside of the top 10 stocks in 2025. We've long discussed for the last kind of 3 months that it could be the time for smaller and mid caps. And we've already seen a lot of large transactions on the show coming through RSP, which is, of course, the equal weighted market. People are starting to wake up to things like healthcare. They're starting to wake up to other defensives and other areas of the market and saying, well, maybe I should take some of the money over there and put it in those areas. Well, as it turns out, if we were looking at some of the weakest time periods across the board when it comes to the smaller and mid caps, we have just reached past the median and the average in terms of a negative 36% move. Now, yes, it's gotten worse twice in the past, but this basically is one of the longest bad stints for those small and medium caps, and it could mark a huge point for us in 2025. Remember, up until probably about 3 weeks ago, every fund was bullish on the small caps. That is now starting to change. And as you guys know, we do not want everyone doing something. Yes, Tom Lee's been doing it for a year and a bit. It hasn't come to fruition. And the main reason why, well, also because earnings is not expected to come through until the second quarter for the small caps, which we'll show soon, but also just everybody's been buying it and it's just been sitting around. Now, let's have a look at some other large transactions. We already reported that we thought Ethereum and crypto had possibly based off. We obviously saw a massive transaction come through in Ethereum, and we saw on X quite a few posts about certain funds that we're buying in as well and all sorts of things. So yeah, it does look like there are quite a few people involved in, let's say, the crypto markets off those drops. And we'll notice here that the one-day inflows were actually positive for ETH while negative for Bitcoin. Interesting. People were certainly trying to buy the dip there for Ethereum, and we'll look at that chart soon. Now, what about crypto? Everyone's lost faith in it. You know, people are basically, well, not everyone, obviously. Most people I know are starting to lose faith in it, and that's because of the epic volatility. You have to expect this, though, in crypto. And remember, January is not exactly the best month of the year for Bitcoin. You know what is, though? Traditionally, October and February. So 82% of the time, the bulls are back on Bitcoin over the month of February, and that certainly will be something we need to watch. In terms of earnings, PLTR obviously cracked 100 after having an absolutely stellar earnings. We've seen Alphabet, we've seen AMD, Snap did pretty well, I believe, and there are still so much more to come this week. So just remember, earnings, these are the expected moves underneath. There's a lot going on, and of course, you need to be on top of those if you are trading those single stocks. I often like to react afterwards. Of course, in the case of PLTR, really probably the best move there was some form of straddle. But in this case, you know, it really comes down to you often do get great opportunities post-result than you do before. Before is a lot of gamble and options can be bloody expensive. Let's now have a look at earnings growth. We mentioned small and mid caps. Why? Because, of course, Wall Street is going to be focused on those super hard throughout the next run of earnings this year. And that, of course, usually is going to be premedicated by large flows. So we'll be looking for more flows into the small caps. When we look at the structure, do what they do, not what they say. And in this case, of course, the market is still holding up. So, of course, we'll be watching that. And as we mentioned, weakness in US dollar recently and the types of kind of things that we were seeing on the dollar often lead into one of our favorite pairs, which has been gold. And gold has even got hedge funds getting out of it in recent times. We released this like a week ago or so and showed you guys, and wow, gold has just gone up and up and up since then. Geopolitical tensions, obviously it's bullish for gold. You know, I've got a list as big as Santa's in terms of what's going on from my bullish reads on gold. And as you guys know, we've been bullish on gold since the 1700s. So that was well over 18 months ago, and it continues to do quite nicely. Now, if we move over to some other large trades of note, I want to mention here large one, the biggest trade we've ever seen in AAPU, which is a 2 times bull Apple fund. Obviously, take of that what you will. And silver did get a massive dark pool near the highs. Now, you may argue that's a sell of these trades, but it also could be a breakout momentum trade. So obviously, we'll be watching silver very closely, and we'll get into the chart soon. In terms of flows, gold best, home builders is worst in the last 5 days. And we saw a bit of risk on over the last 24 hours as we saw some of the more risky kind of sectors find buys and the more defensives come back down as some volatility comes out of the market. Speaking of vol, markets are doing pretty well. S&P 500 is holding well during these tariff times. And as we mentioned, we have to kind of ignore that news for now and focus on the price action. And ultimately, it came back down to the trend line. It found buyers. It cleared that doji of the previous day, and generally speaking, the market has also filled the gap. So yeah, it's looking okay on the charts, and you can see here in the futures market, it managed to find that little bit of a bullish wick, though couldn't make a new high. So we can look at 60-40 as going to be an important area over the next 24 hours. Speaking of 60-40, take a look at this. We've got 60-40 as the major call level over the next 24 hours. And of course, we've got 6,000 as the major put level. So 6,000 could be where you see buyers if we drop down to that level. Then if we go through 6,000, we could fall right into like 59.20, 59.30. So some important zones to be watching over the next 24 hours. What about when it comes to some other things such as obviously Tesla and Nvidia? 380 for Tesla has been pretty strong buying. 420 until we're up there, we're not really seeing a huge amount of calls. And Nvidia remains at that 115 for the puts, the most traded zone. And until we're in 125 land, we're not really seeing a super positive gamma style event. So we'll update if that changes. Some things of concern for sure, the options market and bonds certainly starting to spike up. Remember, we use this indicator to show us when things are looking really bad, yet the price action is doing this. Certainly something we'll be tracking this week. We'll update you guys if things change. High yield junk, well, it's obviously rallying up, and home builders holding the trend for now. When we go over to yields, it's all going to be about non-farm payrolls, which is this Friday at 8:30 a.m. So pay attention to that. We will be covering it, of course, straight after. And you can see here that the US dollar has started to already drop. Now, non-farm payrolls is going to push around yields and the dollar, you would think. But remember, most people are going to say, well, these tariffs are going to push the dollar up. We've got to remember that we already have seen the dollar going up. We're looking towards this still being a weakness pattern for now. Obviously, news could affect it, there's no doubt. But yeah, interesting to see it's below where it was as of last Friday. So this could bode okay for China. It could bode okay for stocks there. And it could also bode okay for things like our gold and silver positions. Speaking of gold, I'll give you guys a clap. Absolutely amazing. This thing just keeps ripping. And as I said, the list kind of gets better and better in terms of why you would think gold is going to continue to do well. Maybe we'll have to upgrade it past 3,000, but I'll just let it hit that first, yeah? So we're only $150, a little bit less, away from that fabled zone we spoke about 18 months ago. So phenomenal stuff, continues to rally up. Obviously, some hedge funds have been under kind of utilizing that. And speaking of which, take a look here at silver. Now, we did see a nice breakout of silver over the last 24 hours. We spoke about it in our private group, links in the description down below. And we think silver is really underpriced compared to where it should be, considering everything that's going on. Remember, it is one of the oldest, what's the second oldest pretty much currency of the world. So you've got to think about it that way as well. And silver is doing some good business. So it's moving up. It could hit 32.60, have a little bit of problems, but in general, this has been some pretty nice price action. And of course, we'll see how those dark pools hold in terms of on the market. That was a big transaction. Oil, most traded zone in terms of this kind of chop. And I guess for now, you would still be kind of on the weakness side there. Oil is certainly quite choppy, but if you were selling, this would be an area that you, of course, would be watching very closely on small timeframes. Tesla 380 obviously is the base for now. If it goes under 380, we think 340. And Nvidia, most traded zone, found some buyers, still remains pretty high on the volume side. And of course, something that we will be watching very closely. 130 plus, going to be a huge deal. We'll continue to watch this one. If Nvidia gives up, remember we talked about leaders before. You know, Nvidia is the most well-known leader in the markets, and it already has a Wyckoff distribution on it. If it can't regain soon, this is certainly a big warning shot across the bow in terms of the markets. It really is important that Nvidia starts to regain back up. Speaking of some warning shots, we obviously saw Google and AMD both fall down. Google after hours trading at 190, which is pretty much the support level. We'll see whether it bids up. It actually looked pretty good on the charts. I got to say, this actually looked like what I would call a dull market breakout. Now, some people could say, oh, well, you know, it was clear it was going to go down or something. I don't think so. I think that this is going to be a very important level to see how the market holds. And for some people, they might be looking at Google and saying, you know what, I quite like that price. AMD dropped to around 109, and it still hasn't been able to break this downward trend. But as we know, there is a bit of accumulation around here. Remember, AMD is like the most traded, other than Nvidia, retail semi. and it's just been punishing people because so many people are long on that on options. So I think this may expire a lot of people, and the next couple of days we will be watching it. HSI, China market, resistance. Maybe it breaks out and keeps going straight away. We're obviously still bullish it, but I could see a temporary pause here and maybe some consolidation. We'll see how it plays into next week's open. And US 2K, very nice off the good buy zone. Obviously looking for 23.30 plus close. That's going to really solidify US 2K coming back in a big way. NASDAQ, very hard to read, in the middle of nowhere. So individual stocks are probably better there. Now, we did mention that the small caps and mid caps kind of have been super underperforming. And you can see here, these are the previous underperformances of around 36%. Now, that marked a huge turning point back in, of course, 2020. And we've seen some stabilization, I think, in the smaller mids. They're holding their own against the bigs right now. And what that tells me is, and I think it tells us, is that we might be seeing accumulation by the street. So is it finally time for smaller mids to go? I think if you've got like a 3-month horizon, things are starting to look a lot better on smaller mids, because obviously deregulation, tax cuts, and possibly easier money flow, that's the type of thing these small mids need. Something to watch. We will be covering it as much as possible. What about crypto? Well, as we said, XRP, Solana, Ethereum, they all saw relatively large big buys coming in. I did see some massive transactions. We've got a big wick coming in through here. I think with Solana, you're going to be wanting to look at a top 220 plus breakout on the high. That's going to be quite bullish. For Bitcoin, still looks pretty good on the charts. Obviously, look at a 102,500 plus breakout is going to be really bullish. And yes, there's an argument for a Wyckoff distribution, but we don't know it yet. And these wicks still have me thinking more towards the upside than downside. But what do you guys think? 82% bullish in Feb. Is it going to hold that? Or are all stats on crypto dead now that everybody seems to talk about them? Let's now take a look at the jobs numbers. We've got that coming out 8:30 Friday, New York time. So make sure to pay attention. We'll give you some updates on that as we get closer to the event. And as always, guys, if you want to follow along, make sure to follow us over on X. Check me out on LinkedIn. I'm posting a bunch on psychology this year. And if you're lucky enough to be in Perth or Brisbane, Australia in February, make sure to come out to our free events. We are sharing some absolutely amazing information we do not share anywhere else. So make sure to get to those events. They are completely free and the links are in the description down below. So make sure to do that. Thank you so much, everybody. We'll see you in the next one. Bye for now.